Hello, my name is Julia Streets and welcome to the podcast series Streets Talks To. And in each episode, I interview leaders from some of the most influential firms, bodies and initiatives in the financial services industry. On each episode, we explore what's at the very forefront of innovation and change. We think about the challenges facing clients and also the industry at large. And we uncover the opportunities that exist both today and as we look ahead. We hope you enjoy the series, which you can find on all good podcast channels, and all the episodes are listed on our website, streetsconsulting.com. You can find these episodes using the hashtag StreetsTalksTo, and thank you for listening, and welcome to Streets Talks To Appital. Appital brings innovation and automation to equity capital markets to address one of the biggest pain points for the buy-side community: the lack of transparency and lack of efficiency across legacy book building and deal distribution activity. It is plagued by inefficient, phone-based, relationship-driven processes. And the Appital platform enables the buy-side community to discover latent liquidity and gain greater exposure to relevant deal flow opportunities they've not been able to access before. And at the same time, buy-side firms are able to interact with like-minded institutions in the liquidity formation process, all in the pursuit of returns for the end investor. So today I'm delighted to be joined by Mark Badyra and Greg Bennett. Mark Badyra is the Chief Executive of Appital. And prior to launching the firm, he worked with the UBS Equity Capital Market Syndicate Desk, where he successfully placed multiple IPOs and follow-on transactions across multiple sectors. He began his career at Bank of America as a foreign exchange analyst before moving to the Debt Capital Markets division. Mark, thanks for joining us. Great to have you on the show.
Thanks, Julia.
And joining Mark is Greg Bennett, who is the chairman of Appital and non-executive director of Mizuho International and chair of their Audit and Risk Committee. He's an experienced equity capital markets operator and for more than a decade was head of capital markets for EMEA and the Americas for Fidelity International. Other tenures have included partner and managing director in equity capital markets and equity syndicate for Cazenove and JP Morgan Cazenove. So Greg, it's wonderful to have you on the show. Thanks for joining us.
Thanks, Julia. Delighted to be here.
So listen, I'm really delighted you could join us on the show today, and I'm keen to get into your view of the market at large. And I really want to start with you, Mark, first of all, which is, when you were out talking to your clients, what is it that's particularly keeping them awake at night at the moment?
Yeah, so when we speak to the buy side, we often talk about three main key areas of concern. Number one is the ever reduction of liquidity in public equities. So this is a historic problem that we've seen for many years, but made quite a bit worse by the introduction of MiFID II in 2018. The second is very much around the lack of any technological process in trading above 5 days worth of volume. So this is the part of the market where they would currently engage an investment bank or broker to build a deal on their behalf. And then the final point is the fact that in that part of the market, they're very much reliant on investment banks and brokers to build those deals on their behalf. And quite often, investment banks and brokers will be conflicted on any detail that they are required to provide to them at that point.
So as I was saying in my introduction, this is very much about, kind of unlocking some of that latent liquidity that people just can't get to at the moment. And then thinking about some of the processes that go around that. And also the role of intermediaries as well, which is really fascinating. We're definitely going to get into some of that as well. And I'm curious to know, Greg, as the world is changing, if I'd asked you this question a year ago, of course, there would have been sort of concerns around just, kind of where are we on lockdown, etc. And now here we are in the autumn of 2021 coming out of lockdown. Are you seeing any shifting concerns in the market or shifting dynamics in the market?
I mean, Julia, liquidity has been a systemic issue in the market and in equity markets for a number of years. Nothing has changed in the last few months that has made it any better or any worse. It's just been a consistent issue for equity investors for well over a decade. If I go back to when I joined Fidelity before the global financial crisis, large institutional investors were then able to call upon the capital of the investment banks to be able to execute flow, as well as being able to call upon a wide range of local, regional brokers, as well as the bulge bracket investment banks, in order to bring expertise and knowledge into the execution of that flow. But that really changed with the financial crisis and has got worse as the years have gone by. So we're seeing reduced capital commitment by the major banks. We're seeing reduced broker engagement. And increasingly, there's a need for the institutional investor to assess how they're going to be able to execute those flows themselves, rather than having to rely on the investment banks. And digitization is one of those key issues that's really developed over the last 5 years. And I guess the pandemic has accelerated that, but liquidity remains a major issue for all institutional asset managers.
Well, I wonder if we could get into how you're helping, the role of Appital in the marketplace as well. Mark, tell us a bit about Appital. Tell us about how you're helping clients address these challenges that we've just set out.
So at Appital, we've essentially designed a marketplace to improve the opaque and inefficient process of trading volumes in excess of 5 days worth of volume. And the way we can do that is essentially buy-side traders provide a profile into the Appital user interface, and we can use that profile to proactively build books of demand when originators choose to do so. And this is a book building process that happens in the market at the moment, but the buy-side trader would typically outsource that to an investment bank or broker to build like a book of demand on their behalf. And as a part of that current process, they lose a whole lot of control to the situation. And there really is no sort of transparency around that process in its current form.
So how do you help them build a better book? How do you help them address this question about intermediaries?
So as Appital we have a very unique relationship with buy-side traders in that they can disclose a very good level of detail into the platform and know that that information isn't going to go anywhere further than within the back end of Appital. And because that unique level of detail that we can capture, we can leverage that to the originator's benefit by accurately targeting these transactions in a far more efficient and effective way.
If the world of fintech innovation has taught us anything, is that once you get that insight, once you create the marketplace and you create the parameters of the marketplace that are trusted, and then you have the data flowing throughout it, of course, the insights and the value that you'll get to a community, I'm not going to use the word ecosystem, but to the community of interest that are your customers, actually the value just continues to build and build and build. And Greg, I'm really keen to bring you in here as well. When you look at Appital and for your extensive experience in the industry, is what are the big things that shine out for you that that the buy side should really be paying attention to?
Yeah, so when I first came across Mark about 3 years ago, when he had founded Appital, and we talked about the product and we talked about the issues that was facing the buy side, I'd been in the desk at Fidelity for over a decade. And what Mark was talking about around inefficiencies in managing liquidity and executing those workflows absolutely resonated with me. And I believe that it would resonate with other institutional asset managers as well. And what's been great is as we've gone out on the road and we've spoken to institutional asset managers, their trading desks, and the guys who are now our clients, they've really embraced this as an area of the market that they needed to see some kind of technological advance in, a move away from reliance on the individual phone-based broking systems, and also on using the investment banks and broking community. They recognize that this is one of the last bastions of old school stockbroking, and they were really searching around for a better way of trying to execute that flow. And really with the Appital product, that's what we're bringing to their trading desk, is the ability for a trader sitting there with an order from their portfolio manager to be able to decide themselves how to execute that flow rather than relying on outsourcing it to somebody else. And for a trader and a trading desk, knowing that they're in control of their flow is a really critical issue for them. And
I know that you've been successfully fundraising. So you've just closed recently a successful funding round, but also you've been working with some of the industry innovators. Mark, can I just ask you, tell us a bit more about some of the partners you've been working with?
Yeah, so over the course of the first 6 months of this year, we worked very closely with FlexTrade. And with FlexTrade, we were able to develop a fixed API or a fixed-based API whereby the Appital user interface can now be accessed via clients of FlexTrade in their current kind of mission control screen, which is FlexTrade. And this was a significant step forward for us in the, we always knew that when we built Appital that it had to sit very neatly within their kind of current desktop. And that's what we've been able to bring to fruition with the FlexTrade integration.
And also just thinking about a lot of these processes, particularly the historically manual processes we've just been discussing, They're now, of course, being brought onto electronic platforms, the execution management systems as well, and executed on certain marketplaces. Tell us a bit about, because I got you've done a collaboration with Turquoise, part of the London Stock Exchange Group.
Exactly. So all flow that's essentially arranged within the Appital platform, it will be executed on the Turquoise MTF. And with that, it means we can execute, I think, around 4,000 equities within Europe, which is, fantastic for us at launch. But most recently as well, they've also announced that they can now execute a number of US equities. So, with that integration, it means that that point of execution, that execution workflow, is something that is pre-existing within buy-side traders' remit.
Which is wonderful, because that suggests not only kind of UK, European, but also international potential for further expansion, which is really exciting as well. One of the things that came up earlier in the conversation was the reference to MiFID II. It's hard for any listener not to pick up on a reference to MiFID II as well. This is a question that I ask all our guests when they come on the show. It's a slightly odd one, but I am really keen to know, what is your favourite piece of regulation or policy right now? And Greg, I'm going to come to you first of all. Come and tell us, what's your favourite piece?
Well, I think, Julie, you've already covered it. MiFID II. I mean, it is the favourite and also the least favourite bit of legislation at the moment. I mean, it really has had a pretty major impact on equity markets. And to my mind, it was entirely predictable what MiFID II was going to do. And that was going to be a reduction in liquidity, a decrease in broker engagement, and ultimately an increase in the cost of capital, particularly in the small and mid-cap sectors of equity markets, both here in the UK and also across Europe. I think it's quite clear that it was going to have that effect when we see that if you look at the research coverage, say in a sort of mid-FTSE 250 company, before MiFID II came in, there may have been 7, 8, 9 brokers covering that stock. Now, I think if you talk to a FTSE 250 company, they'd be lucky to be having 2 or 3, 1 or 2 of whom would already be a sort of house advisor to the company. And that's really had a major impact on companies and their ability to raise money, the ability for the equity market participants to actually form a reasonable view on the prospects of the business, and also then ultimately to form a reasonable view on the pricing of that stock in the markets. And that just ultimately always will lead on to a reduction in liquidity. And, even though MiFID II is going through some reviews now, we've seen the Treasury in the UK launch their wholesale markets review, and we've seen the EU in Brussels say that they're going to potentially relook at MiFID II. Ultimately, it feels like it's too little and it's going to be too late. It really has reinforced the fragile nature of liquidity in equity markets that I referred to earlier. And, as an equity market participant, I feel saddened about that. However, what's clear is that for Appital, it's really given us an opportunity to come in there and provide an alternate way of executing these flows and really trying to bring some liquidity opportunity back into the market, which has simply dissipated over the last few years.
And this sounds really important right now, because as we think about, life post-Brexit, and we think about the amount of innovation that's required across the UK, and we think about the need to raise capital and bring corporates to market, this is a really important piece of the jigsaw puzzle, which is then how do you uncover that liquidity and make that liquidity available to the institutional marketplace, which is really fascinating. It won't be the last conversation we have about this, for sure. Mark, can I ask you the same question? I expect you, of course, you're a big fan of MiFID II as well. Talk to me about the policy or regulation that you particularly like at the moment.
I'd probably follow Greg again in terms of MiFID II, and it's really, I think, comes back to where Appital was born from. Because when I was sort of working in investment bank, it came in 2018, and I sort of felt firsthand how much additional operational legwork that we had to go through to kind of get these deals over the line. And I always felt like, there had to be a better way to get this kind of operational legwork done. And that would be to create some technology within the equity capital market space.
So in order to find out more about this podcast series, Streets Talks 2, and today, of course, we're talking to Appital, you can find all our episodes on streetsconsulting.com/StreetsTalks2 and on our hashtag StreetsTalks2. No surprises there at all. So I hope you're enjoying this conversation with Appital. It is very interesting to talk to an organisation that is so of its time right now, early on its journey, successfully fundraising, got some critical partnerships in the industry and a wave of support from the buy side in the institutional world, and at a geopolitical time where it feels like this potential is ready to be truly unlocked as well. I'd love to think about, I kind of paint a picture of the road ahead and pick me up at that point. I'd love to hear your thoughts about what are you thinking about as you look at the pathway ahead. Mark, let me come to you first of all. And then Greg, I'd love to hear what advice you're giving clients.
Yeah, so with all of our releases over the summer, being this integration with FlexTrade in the EMS space, or whether it be Turquoise and, completing that partnership for a point of execution, we now as a business have to take those technological challenges and complete them over the next sort of 3 to 4 months. And I think we need to scale that as well. So, we've completed one EMS integration, but we have more to come. And this will allow us to extend our reach even further to the wider buy-side community.
Because we know it's all about distribution and scale, not only from an investor's point of view, who's backing Appital, but also in terms of the ability to change a market and also welcome more participants into the market as well. Really, really interesting. Well, I wish you every success with that pathway ahead, and it'll be interesting to see how that goes. Further announcements, no doubt, in due course. Greg, let me come to you for final remarks on the show today. I'm really keen to hear, as you're out of the market, I would call you a veteran in the industry, seasoned perhaps might be more appropriate, but I'd love to hear your thoughts about when you're talking to clients or when you're talking to the market, what advice do you give them as they in turn plan ahead?
I think for all institutional investors now, there is a recognition that we've moved on from the model of the post-Big Bang through to financial crisis, reliance on investment banks, reliance on brokers. And I think there's a real theme running through institutional asset manager and the trading desks at the moment, which is that they need to be relying on themselves to try to execute their flows. So, I think I would encourage all investors to really look for ways of engaging directly with each other. There's a need for them to use alternative liquidity providers, and they're starting to do that. There's a real need for electronic liquidity platforms. And again, they're really gripping this and really engaging with those platforms, of which clearly, Appital, we're here to help the institutional buy-side community. And we're here to try to enhance liquidity in that wider market and allow the trading desk to be more self-sufficient in managing that illiquid flow. So really, I believe it's happening. I believe it's a theme that's really resonating with institutional asset managers, and really keen to encourage them to carry on and use us to help facilitate that.
Well, it's been a wonderful discussion. Thank you both for taking the time to be with us today. I know just how busy you are building your business and extending your reach with a very clear pathway ahead. It's been fascinating hearing your views from literally the macro down into the micro in terms of how you're building the business and the impact that you're having on the market, but also the relevance and resonancy of why now. So Mark Badyra, thank you so much for being with us today.
Thank you very much.
And Greg Bennett, Chair of Appital, thank you for being with us also.
Great to be here, thank you.
And let me just tell you how you can find out more about Appital. Their website is appital.io. They're on Twitter at AppitalHQ. And also you can find them, of course, on LinkedIn. So I hope you've enjoyed the conversation as much as I have. Thank you to all our listeners. I've been Julia Streets, and thank you for listening to StreetsTalksTo Appital.
This episode of Streets Talks 2 was produced by me, Kieran Yates, on behalf of Streets Consulting Limited. Streets Consulting is a business development, marketing, communications consultancy that's focused on helping fintechs from the smallest startup companies to some of the world's largest global organizations. Everybody's trying to innovate and everybody's trying to grow. You can find this episode on streetsconsulting.com and using the hashtag StreetsTalks2. We can be found on LinkedIn and on Twitter at StreetsConsult. Thanks for listening.